Howdy, folks. It's your skipper here, Darius Dale, to present our macro minute for Tuesday, May 31st, 2022. Welcome back from the holiday for my U.S. investors. Starting with asset markets, we have stocks mixed this morning with Asia up and U.S. and Europe down. Commodities mixed with crude oil leading. Crypto up, dollar up, global bond yields up. Market moving headlines. Geopolitics allegedly still matter. So oil rolled to a 2-month high after EU leaders agreed to pursue a partial ban on Russian crude, paving the way for a sixth package of sanctions on Moscow. The penalties would forbid purchases of seaborne imports, which are about 2/3 of Russia's crude exports to the EU, but they will include a temporary exemption of pipeline supply, which is obviously the remaining third. Hungary, which has been the holdout, is said to have secured a guarantee that it'd be able to take Russian crude if pipelines were disrupted. So that's keeping the ball moving forward on sanctions. Shifting gears, reminder that fighting inflation is the Fed's only priority right now. There's no growth priority. There's no financial stability priority. It's in fighting inflation. Jerome Powell and Janet Yellen will join Joe Biden in the White House today for a "What Can We Do" gathering. Biden's top priority is tackling inflation into the midterms, but the general state of the economy is also on the agenda. The FOMC hawk Christopher Waller knows exactly what to do. He says he wants 50 basis points hikes for several meetings. Reminder that we've priced out 50 basis point hikes after the June and July meetings. Those could come back in terms of the September and November meetings, so be aware of that. And then lastly, shifting gears again to the ECB, reminder that fighting inflation is the ECB's only priority. So the ECB faces more pressure after Euro area headline CPI accelerated to a fresh all-time high of 8.1% year-over-year in May. These are preliminary May figures. And we also saw a fresh all-time high in the core CPI rate to up to 3.8%. So it's not just food and energy. Obviously, food and energy are having a big impact on the headline figures, but clearly there's a deepening of core inflationary pressures in Europe that may be a leading indicator for a deepening of core inflation pressures in the United States of America, where, oh, by the way, investor consensus, which is poop scared about a sustained bear market rally, does not realize that, hey, this inflation peaking narrative, and therefore the Fed must pause and give us what we want, which is more liquidity. Maybe that narrative gets punted over the course of June as they start quantitative tightening. If that narrative gets punted, you will not have lost money with 42 macro on that. What we believe is a ridiculous view. Big movers. Shanghai Composite up 1.2% this morning to up 4.6% month over month. That's in line with our positive views in the Chinese growth and liquidity cycles. MSCI Emerging Market Index up 2.4% with some sympathy there to up only 1.6% month over month. 10-year nominal treasury yield on this inflation move in Europe and this sort of what can we do about inflation gathering in the White House today, up 13 basis points to down 6 basis points month over month. And then the 10-year nominal German Bund yield up 8 basis points to up 19 basis points month over month. So still a lot of hawkishness out there, still a lot of liquidity reduction that needs to, one, take place, and two, get priced into financial markets. You can't price in quantitative tightening ahead of time. Trust me, I've tried it. Move on to our VAMs and probable range signals. U.S. dollar index, that's still bullish. VAM still oversold here. You got 2.9% of upside to the upper boundary of its probable range. Gold still bearish. VAMs nearly overbought. You got minus 4.3% of downside versus only 70 bips of upside. 10-year nominal treasury yield, it's backing off the lower boundary of its probable range finally with 8 basis points of downside versus 33 basis points of upside. High yield OAS, bullish VAM still minus 15, or sorry, it's at the lower boundary of its probable range with 99 basis points of upside. Holy moly, that'd be a big move. So I mean, this chart looks like everybody got ahead of themselves on the Fed bailing out asset markets and pausing on removing liquidity, and we just have a different view. We have a variant perception. It's okay to have a variant perception in financial markets. That's the only way you can make money is by consistently having accurate variant perceptions. And we do believe we obviously expect to be accurate. And if we're not accurate, we'll risk manage that along the way. S&P 500 bearish VAM still. You got minus 11.6% of downside, and it's at the upper boundary of its probable range. I mean, what if by the end of June or July, it's at 3,600? How many people will have lost money chasing this bear market rally? I mean, that to me is very scary to me because that's it's in the probable range. 3663 is a probable outcome for the S&P 500 over the next few weeks. Just letting you know that. VIX, neutral VAMs, minus 16% of downside versus 24% of upside, so kind of middling there. NASDAQ 100 bearish VAMs at the upper boundary of its probable range with 15% of probable range downside, or downside in its probable range. Russell 2000, that's bearish VAMs. It's at the upper boundary of its probable range with 14% of downside. I mean, what if, I mean, this better break out, because if you look at my inbox and you look at my Twitter notification stream, I haven't had one person in 5 days, or sort of 5 trading days, ask me about the downside. 100% of the hundreds of questions I've gotten in my email and Twitter have been about the upside from here. And to me, it's really dangerous according to our math. Moving on, Bitcoin, bearish VAM still minus 19% of downside at the upper bound of its probable range. What if Bitcoin's down 20% in 3 weeks? I'm not saying it's going to be. I'm just saying that's what the downside is in the probable range. So just be aware of that relative to the upside in the probable range. Ethereum bearish FAMs, only 4% of upside with minus 20% of downside. Bloomberg Agricultural Index, neutral VAMs kind of in the middle of its probable range here with 3.7% downside, 3.9% of upside. And then lastly, Bloomberg Industrial Metals Index, that is bearish VAMs, with it's at the upper bound of its probable range with 9% of downside. So with that, Darius Dale will be presenting our macro minutes going forward after we publish our leadoff morning note. For those of you subscribed to our leadoff morning note, we'll have all these VAMs and probable range charts analyzed in succinct detail in that note. So you'll get that ahead of time, and then we'll publish our macro minute. Let's call it around 8:30 to 9. That'll be our window there going forward. So we'll catch you back here tomorrow morning. Everyone have a great day out there.